Anything in particular that you like that you see on sale today, so to speak, given there's very little we really know here in terms of the potential impact from this new strain?
Well, I'll divide up the stocks I look at, consumer tech, into three areas: the COVID winners, the recovery plays, and then stocks that I think are kind of long-term structural winners, as opposed to the temporary winners from COVID. You're seeing the Netflixes, the Pelotons, the Chewies, the stocks that did really well during the first COVID cycle. Hopefully not too many of these, but those are outperforming. And then those that were really recovery stocks, anything that's travel related or mobility related, the ride sharing companies, the performances are dramatically different between these, and you would expect that on a day like today. Then that leads to the third basket of stocks. Those are the ones that I think long-term investors should stick with because they're structural winners from COVID, and they're good enduring tech assets on their own, and that's Amazon and Facebook. That's how I divide them up today.
Yeah. Well, let's talk about Uber a bit because I know it is one of your top picks. I would assume Uber Eats is not enough to offset if there was really a reduction in terms of traffic, so to speak, for Uber itself, if this variant does prove, unfortunately, if that is the case, to be something that causes people to perhaps change their behavior.
Yeah, you're right. So, you could look at DoorDash today. So DoorDash is modestly outperforming the market. It's down, but not by as much as the market because people remember that we had a surge spike, and they're probably a structural winner from the COVID crisis, DoorDash. But that's perhaps half of Uber's business. If you're going to look at one sector within kind of consumer internet that was most impacted by the COVID crisis, has been most impacted, it's still ride sharing. Ride sharing is 40% off its pre-COVID levels, whereas travel is 10 to 20%. So really ride sharing is waiting for us all, the people to start commuting back to work and for business travel to pick back up. And the more of these COVID stories we get, the longer that day of return is. That day of return is going to be there. At some point, we're beyond this. And so you should be, long-term investors should be stepping in and on an asset like Uber, where I think the valuation is really compelling. I think the multiple can double from here. I don't know when COVID lets up, but when it does, here's a great recovery play, and one that took the advantage of one of the few advantages of COVID and stripped out a lot of costs and was able to reach positive free cash flow on 40% less volume. That's really impressive. So that should tell you there's a lot of profits to come from Uber when the recovery occurs.
Mark, we now have the Dow down 2.9% off, well over 1,000 points now. As we look at that move lower, I want to get your thoughts a little bit on Meta, the company formerly known as Facebook. You said it's one of the structural picks that you have, but it does face so many headwinds. I'm wondering what you see Facebook Meta doing this holiday season, especially when it comes to social commerce and using e-commerce as a way to navigate around some of those Apple operating system changes.
Yeah, so Julie, there's a bunch of issues you just raised there that I think are super important for Meta, or I'm going to keep calling it Facebook for a little while longer, that are going to be really important to Facebook. But social commerce, that, we all spiked up in our social media usage, and we spiked up last year in terms of our shopping on social media platforms. So Facebook should be a long-term beneficiary from that. Is the metaverse a great investing play? Is it an investable thesis near term? I don't think so. I think it is going to be an investable thesis kind of 3 to 5 years out. I don't think it moves Facebook stock now, just like Waymo hasn't moved Google stock in years. But you like to see large platforms with that kind of option value, and that's what Meta is. It's option value for Facebook shareholders or for Meta shareholders. I like the stock. I think valuation is really compelling. There's also those overhangs that you know really well, Julia, related to regulation and these ESG concerns. I think a lot of that's priced in. I think it's trading at a 25% discount to Google with similar growth profile, which tells you that if Facebook can address any of these concerns, and maybe they won't, but if they can, there's a lot of multiple expansion you could see out of Facebook. I think it's a very cheap stock if you strip out some of these investments and the cash that they have. I think it actually trades at a discount to the market, and it offers you one of the best growth profiles out there in tech. It just does. Highly profitable, lots of free cash flow, lots of top-line growth. I like Facebook, Meta.